Triple RSI-ADX trading strategy. The best scalping and swing trading strategy for beginners that no one ever told you. This video provides a clear, winning, step-by-step guide to how to successfully trade in the forex, stocks, or any financial markets and generate consistent profits. So, by the time you finish this video, you'll know exactly when to enter high-probability trade using the RSI, EMA and ADX indicators. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Triple RSI-ADX is one of the best trading systems to generate trade ideas for any financial asset. It is so popular in the financial market for its efficiency. So it makes sense that you can generate many profitable trade ideas using the triple RSI, 50-period EMA, and ADX indicator. However, it requires having a particular level of understanding of the indicator components alongside the using procedure when seeking to obtain the best results. We will dive deep into the tool in this video. Moreover, it contains trading strategies using the indicator with chart attachments for better understanding. What is the triple RSI indicator? This indicator contains 3 RSI dynamic lines instead of 1 in traditional RSI. It is unique and uses additional calculations alongside the traditional RSI indicator concept. Different values this indicator uses are 7, 14, and 21. The first RSI line of lower value is red, followed by the second blue and the third green. Crossover between these lines enables trading opportunities for traders. And now, what is RSI indicator? An RSI trading strategy using the relative strength indicator is a great place to start when day trading. It has default settings of 14 periods and 70-30 levels. How will the RSI setting change the indicator trading signals? The RSI setting will affect how frequently the RSI gives overbought and oversold signals as well as divergent signals to buy and sell. What does RSI 14 mean? The default RSI setting for the RSI indicator is 14 periods. That means the indicator is calculated using the last 14 candles or last 14 bars on the price chart. Using a shorter time frame, for example 5 periods, will cause the RSI reach extreme values, or above 70 and below 30, more often. By the same token, longer time frame settings will see the RSI indicator reach above 70, or below 30 less frequently. This chart shows how to change the various settings. What is the best RSI setting for day trading? The developer of the RSI, J. Wells Wilder Jr., recommends using the 14-period RSI. But other RSI settings can also be good to trade, depending on whether you are trading forex, stocks, cryptocurrencies, or other financial markets, and the time frame you are trading off. Looking at this chart, you can compare a 14-day RSI versus 5-day RSI and versus 50-day RSI setting. It can be observed that the 14-period RSI gives several signals, the 5-period RSI is very frequently giving trading signals, and the 50-period RSI gives just one very good trading signal throughout the time period selected. In his book New Concepts in Technical Trading Systems, Wells Wilder only uses trading strategy examples with the 14-period RSI. Although other RSI settings are certainly possible and potentially profitable, since Wilder created the indicator, we should take time to note why he thinks his indicator is best set up with 14 periods. Firstly, 14 periods is like a fortnight or half a month. Although markets are not normally open 7 days per week, so 14 periods does not equal 2 weeks. This time frame has a certain basis in nature relating to the time it takes the moon to travel around planet Earth. These natural phenomenon like the Fibonacci sequence have a way of working in trading markets. In fact, Wilder says in his book that he tested multiple time periods and found 14 to be the most effective for his swing trading style using daily time frame charts. So his choice of technical indicator settings was based on real evidence from his day trading. How to use the triple RSI in trading strategy. You already know that the triple RSI involves calculating the market data using the same concept as the traditional RSI and conducting additional calculations. When the dynamic red line reaches above the other two dynamic lines and all the lines are above 50 level, it declares a positive force on the asset price. And vice versa for the opposite crossover. When the dynamic red line reaches below the other two dynamic lines and all the lines are below 50 level, it declares a negative force on the asset price. The triple RSI-ADX trading strategy. In this trading method, we combine the triple RSI indicator reading with the ADX and 50-period EMA indicators to determine the future movement of any particular trading instrument. We confirm the price direction using the triple RSI and 50-period EMA indicators. And then, we confirm the current trend strength by observing the ADX indicator reading. Then seek to open trading positions by combining both indicator readings. This strategy suits many time frame charts. We suggest using a 15-minute or higher time frame chart to get the best results. Why 50-period exponential moving average? Starting with a clean chart with nothing but candlesticks, lay out the 50 exponential moving average, or EMA. Believe it or not, we are ready to go. Things get interesting for us when price returns back to the 50 EMA after having spent some time away from it. If you've followed moving averages closely in the past, you would likely understand that I am basically hinting at trending price action. When price runs sideways, moving averages tend to close in and will get entangled with the ongoing live action also getting hit quite frequently by price. For moving average-based systems, that can be account killing. As a simple filter to this problem, you should only be interested when price touches the 50 EMA after relatively spending some time away from it, as when it shoots off into a decent trend. Let's look at some of the points on the same chart that we might be interested in. Notice how each of the two touches of the 50 EMA result in a bounce, and that they occur as a follow-up to a strong move prior. It is not uncommon for price to bounce harder from the 50 EMA, the more time that it spends away from it. The filter. When not to trade. We have already talked about an important filter that can help you quickly eliminate the weaker setups from the stronger ones. Trading only in a trending market where price does not hit the 50 EMA in quick succession. Let's also talk about another extremely crucial filter, horizontal support and resistance levels. I am excited every time I see price pulling back to the 50 EMA following a strong move, but my fingers will not roll over the order button until I find the point where price touches the 50 EMA is lying in confluence with a horizontal former support and resistance level. I have found this to be an amazing filter. Sure, I miss a few trains, but the ones I take, I sure as hell enjoy the rides, mostly. The entry trigger. Now that we know the dynamics of the system itself, let's look at the two ways that I believe you can trade this method, ranging from a conservative approach to an aggressive one. The aggressive approach. This approach allows you to execute an order upon the touch of the 50 EMA. The stop loss will need to be placed arbitrarily a few pips above or below your entry, as the case may be. Notice that such a trigger would have worked phenomenally. Price hits the 50 EMA and bounces hard. The conservative approach. For those who like their peace and relaxed lives, there is the alternate approach, where you can wait for a definite price action signal at the bounce of the 50 EMA in the form of a candlestick pattern like a pin bar or an engulfing bar pattern. In this example, the chart shows a nice pin bar off the 50 EMA and a horizontal support and resistance level. You can now take your trade as you conventionally would if you were trading the pin bar. That is, taking an entry at the break of the pin bar with the stop loss objectively placed at the break of the other end of the bar. Personally, I prefer to wait for a price action confirmation because I have been an avid fan of candlestick patterns my entire trading career. Although very occasionally I will also take touch trades when I see a mountain load of dead obvious confluence of support and resistance areas lining up at the touch point. So, if you can learn to combine the two, 50 EMA and support or resistance area, you have a mighty effective trading system. What is ADX indicator? Filtering out bad trades has become the search for the holy grail for all traders. Unfortunately, there is no way to avoid all the bad trades. It's a guarantee that we will run into bad trades and occasionally lose. We can't completely eliminate that. However, we can add some rules and filters to try to reduce the number of false signals we get and limit the number of bad trades we run into. And that's what the triple RSI-ADX system does very well. And now, I want to show you the important part. How we use the 14-period ADX to help filter good trades from bad trades. First, when the ADX line is below the 20, it means there is no trend. Second, when the ADX line is above the 20, it means there is an extreme trend. Third, when the ADX line is moving upwards, the trend is gaining strength. Fourth, when the ADX line is moving downwards, the trend is losing strength. Whenever we see the signal candle, we immediately look down at the ADX to see where the 14-period ADX line is. If the ADX line is below the 20, we do not trade, regardless of anything else. We only consider entering a trade if the ADX line is above the 20. The 20 line is our marker. Anything below the 20 line is a no-trade zone. Anything above the 20 line is a possible trade. We also need to look at which direction the ADX line is heading. If it is moving down, we do not trade because the current trend is losing strength. If the ADX line is above the 20 and is moving in an upwards direction, we have everything aligned as far as ADX is concerned to signal a valid entry to the market. And now, how to trade with the triple RSI-ADX strategy. Bullish trade scenario. When seeking to open buy positions, observe indicator readings as follows. First, the dynamic red line of the triple RSI window reaches above the other two dynamic lines. Second, the dynamic blue line crosses above the dynamic green line. Third, all three dynamic lines reach above the central or 50 level and head on the upside. Fourth, the price increase and above the 50-period EMA line. Fifth, the ADX reading reaches above 20. Entry. When these conditions match your target asset chart, it positively influences the asset price. So, open a buy position. Set an initial stop loss below the current swing low with a buffer of 5 or 10 pips. Bearish trade scenario. When seeking to open sell positions, observe indicator readings as follows. First, the dynamic red line of the triple RSI window reaches below the other two dynamic lines. Second, the dynamic blue line crosses below the dynamic green line. Third, all three dynamic lines reach below the central or 50 level and head on the downside. Fourth, the price decrease and below the 50-period EMA line. Fifth, the ADX reading reaches above 20. Entry. When these conditions match your target asset chart, it negatively influences the asset price. Open a sell position. Set an initial stop loss above the current swing high with a buffer of 5 to 10 pips. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Here are other examples of how to trade the market using the combination of triple RSI, 50-period EMA, and ADX indicator to fully understand this wonderful strategy and to make the most out of it. The triple RSI-ADX is probably one of the most popular RSI trading strategy. The trading system is ideal for trend-following strategies. However, no strategy gives a 100% profitability guarantee at all times. We suggest following money and trade management rules when trading with these strategies, besides practicing these at demo trading before applying them on actual trading. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell and leave us a like to show your support. See you next time.